Okay, so let's kickstart today's session, right? So if you guys have any questions along the way, please do put them under the questions tab. So just a quick introduction of myself. I'm Lee Sing, right? So you can also find me on LinkedIn. So if you guys have any questions and you're watching a recording of this, right, please feel free to reach out to me on LinkedIn. Just a quick disclaimer, the information presented doesn't constitute as investment advice. It's for educational purposes only. So this is the agenda that we will be covering for today, right? First, we will take a look at stochastics oscillator and the common ways of using stochastics. And moving on, right, we will cover multi-time frame analysis, right? So how we can use stochastics across different time frames. So in general, just to share a bit more on the technical analysis side, right? So usually when I do my technical analysis, I start from the higher time frame. So either on your weekly or your daily to determine if there are any key levels that prices are currently testing. And once you have that, right, you can go on to your smaller time frame to see if there are any supply or demand zones that prices are respecting. Is there any change in market structure, right, or bullish market structure that's being formed? So for example, if prices are sitting on a support area, right, so if prices comes into support region over here, forming your lower lows, lower highs, pushing into this area. Usually it doesn't just take off immediately. You can see that along the way, right, there'll be consolidation. If it comes into this zone, right, you'll see price consolidate slightly before it starts forming clear market structure to the upside. So we will be exploring how we can use this along with stochastics, right? How we can look at overbought, oversold regions and help us to determine this reversal. And moving on, we will also be taking a look at momentum indicators, right? Specific to this, we will be taking a look at MACD. Okay, so sorry for this font, right? But in this case, right, finally, we will tie everything that we have learned together in this session, right? So, and the other sessions covering on how we can combine market structure, supply demand zones, stochastics, and also divergence to identify reversals if price comes into this higher time frame zones. So for divergence, right, just to cover a bit more, right, a quick recap on what we have. For bullish divergence, essentially, you see that prices are forming lower lows and lower highs, right, coming into this zone. But subsequent lows, you can see that even though it forms a lower low, right, on stochastics itself, it actually forms a higher low, something like that. Okay, so you can see that what this suggests is that there is a slowdown, right, or there is an exhaustion in this movement downwards, and we could be seeing a reversal. Of course, right, we don't want to trade solely just based on divergence, especially because on your lower time frames, right, if prices are still in a bearish structure, right, this would be a first indication of a reversal. But where this would be useful, right? So where we can spot bullish divergence and where this would be more useful with higher probability setups, it's when price comes into this support. So it's already in a bullish market structure and your lower lows and lower high forms a bigger part of this whole pullback leg. So, which means that if prices are in an uptrend, you want to trade in the direction of the trend, right? And we're trying to find a reversal of this movement that is pulling back within the higher time frame impulsive move, right? So if it pulls back, then in this case, right, you will see this lower lows and lower highs being formed. And once there is a divergence and price comes into a higher time frame demand zone, right, then that gives us a higher probability setup. Okay, so we will take a look at this example, right, specific to euro dollar in a moment. Okay, and if you guys have any questions, right, do put them under the tab. So let's take a look at the next setup. Just exit this. Doesn't seem like I can. Okay. Okay, so next we want to cover on stochastics, right? So maybe just before we go on to a deeper dive into stochastics, let's just cover what we have mentioned, right? A quick summary of what we have mentioned for stochastics. So itself is a momentum indicator, right? And it compares the closing price over a specific price range, right? So this can be set by the user, right? Default itself is 14 periods. It also consists of two lines, right? So if you load the stochastics on TradingView, you can see that there is a fast line as well as a slow line, right? So the fast line is represented in blue, the slow line is represented in orange. right? Or the signal line rather, right? So the fast stochastics and slow stochastics. So when your stochastic crosses above, right? So if your fast moving stochastics crosses above the signal line, which is your orange line, right? Then this is a bullish signal, vice versa, right? And one more thing to note is that there are two zones, or rather two regions, right? Two levels that they work with. So stochastics itself ranges from 100 and 0. So within this zone, right, usually there is a band, and the band stands at around 20 and 80. So how this works is that when price enters into this zone, right, so if it falls, when stochastics crosses below the 20, then in this region, this is actually the oversold region. When stochastics crosses above the 80, this is the overbought region. Okay, so we have covered quite a few of these examples in the previous webinars, right? So if you want more details on that, you can check out our recordings, right? But that's the general idea. So when stochastics oscillate between this band, right, when it exits the region, so there are a few ways you can use it, right? So in general, when price crosses above the 80, we're expecting price to reverse because it enters the overbought region, right? And when there is an exit of the region, right, this could be confirmation for a bearish move. And likewise, when price enters the oversold region, which is below 20, an exit of the region could indicate a bullish move. So to the upside, right? And this is to the downside. But of course, as I've said, right, in this case, right, we don't want to trade solely just based on stochastics, because if you notice in a trending market, right, whenever price trends higher, it could be forming a bullish structure. You can see that stochastics, right, because this is an oscillator, it doesn't work well in trending markets. So in a strong trending market upwards, prices would constantly stay, stochastics will constantly be in the overbought region, right? But it doesn't indicate that reversal. So as much as possible, I'll still suggest that we take a look at market structures, right? Instead of just trading solely based on stochastics. Okay, so I hope that it's clear so far, right? Let's take a look at our next slide. So this is stochastics, right? So you can see here, right? Essentially when price, it's in a bearish move downwards. Again, let me just get a pen out. So when you see that price is in a bearish move downwards, right? What we have here, it's again bearish market structure. So this is euro dollar on the daily. You see lower lows and lower highs. So notice this, right? And how it corresponds to stochastics, right? So you have lower lows and lower highs, and exit of this region, right? So on stochastics, you can see that when prices are in a downtrend, right? So as we've mentioned, when it exits the oversold region here, right, by right, we're expecting a push up, but this push up is actually forms, this move up actually forms the pullback of this bearish move down. Okay, so I hope that this makes sense and this is clear, right? So this push up forms this whole move down, and then once again here, right, when price pushes lower, you can see that stochastics itself, this region, right, it exited the oversold region, which forms the pullback leg before price continues lower. So if you want to trade in the direction of trend of your, or if you're trying to catch this big movement down, right, what we should focus on in a downtrend instead would be on the overbought region, which is this area here. So we're waiting for exit of the overbought region, right? Because when prices exit the overbought region, what this suggests is that your pullback leg, right, which forms this move up within that whole leg that we have here, right, this pullback leg, the upward movement, right, or momentum itself is exhausted, we could be seeing that reversal. Okay, so in this case, you can see that when price exits the overbought region, we saw that consolidation before it continues to the downside. And then once again over here, when price exits the overbought region, right, we see that consolidation before movement to the downside. And how we can characterize a downtrend, right, it's that you see a break of its previous low. Okay. So likewise, right, your change in structure comes over here, price broke above the high. And when that happens, you can see that on stochastics, right, price entered into this region, exited the oversold region before it continues to the upside. Once again over here, and this region. So price exited and it continues higher. Okay, now let's take a look at another setup that we have, right? So this it's on euro dollar. This is the picture on the daily time frame, right? So essentially what we have here is that you can see that whenever we do the analysis, right, is that we have our higher time frame first. So you take a look at the higher time frame. This can be based on your daily or your weekly, right? So trying to find if prices are sitting on any key levels. So let's say if prices are sitting on a key level, right? So if stochastics is sitting on a resistance and support level here, right? Once price comes into this zone. So again, let me just get this pen out, right? So when price comes in, right, we saw that resistance, price broke above, retested this region, and once again over here, right? So when price broke and retested this area, right, the support region that we have here, you can see that this itself, right, so when price comes into this zone, this is the potential support area to watch. And more importantly, right, if you refer to the previous movements, you can see again higher lows, higher highs. So price broke above the last high, came back into a support region here. And if you extend this support region across, you can see that it basically price interacted with this zone quite a few times, right? So this is the region, right? So now that price comes into this area, right? So we can unwind a little and let's just take a look at what we have here. So on this region alone, right, most important thing to note is that we're in a bullish market, right? Bullish market structure noted here. Right, so this is important because if prices were moving the other way, right, then in this case you want to focus more on the overbought region, right? So in this case, we're trying to focus on the oversold region, right? Because an exit of this region indicates movement to the upside, and that will be in line with the trend. Okay, so once we have this area, we have identified this pink zone, which is basically the daily demand, right, or daily support area that we have here. Let's move on to the next slide. Okay, so just bear in mind this, right? And the next slide, we will focus on this portion of the chart. We will go down to the smaller time frame. I believe it's the 1 hour time frame, just to see how prices react here and if there are any supply demand areas and how that ties in with stochastics. Next, so you can see that on stochastics, right, we have daily demand area. So this is the D1. I'll put this as the daily demand region. Price comes into this zone, and you can see that it starts forming over here, demand region, right? And demand areas are usually formed, right, when this follows with a break in structure. So you can see that prices, right, prior to this move down, it's been forming lower lows and lower highs. You can see lower lows and lower highs being formed, and following which price broke above structure, pulled back, and it comes into this demand zone. Right, so price comes into this demand area. You can see that came into this region here. But just before that, right, let me just bring your attention to this. So we have the break in structure. This is the first indication, right, that prices could be moving to the upside. That's one, right? But more importantly, it's not just any break in structure. It comes in when prices comes into a higher time frame daily demand area, which is this pink zone that we're seeing here. Okay, so once we've identified that, right, just notice that before any move up itself, you can see that there will be a consolidation here. So in this case, right, this is this range. So I've highlighted this in a gray box. Basically, this is an area where price respected both resistance and support levels, right? So you are seeing this range before this is characterized, right? The break of the range is characterized by this bullish move. You can see this huge bullish candle. Right, so price rejected the resistance, and then following which there was this huge bullish candle, which suggested that this bulls, right, or this buying pressure definitely overpowered the sellers. So once that happens, right, and price broke structure, it pulls back, right? Within this area itself, you can see that on the break of this range, right, price, it's showing number one, right, it's showing the break of or an exit of this oversold region. That's one. Right, so price exited the oversold region. It also broke above the range and then caused your break in structure, right? The break above market structure. And what's also interesting to note is that when this range was being formed, you can see that within this part itself, right, there is actually a bullish divergence. Okay, you can see bullish divergence, right? So again, for bullish divergence, it happens when prices form a lower low. So if you compare the previous low, this low, and this low, you can see that the second low is actually lower than the previous low. But if you mark out the same movement, you can see on stochastics, right, it actually forms a higher low. So there is bullish divergence, and it also suggests, right, this suggests that there is an end of this downtrend. But again, we don't want to trade just solely based on this, right, because this can happen when you're in a downtrend, price could continue to trend lower. So what would be the confirmation or a sign, right? A higher probability that there is indeed a bigger movement upwards is when you first see this, your break in structure. So price broke above, and once that happens, you can see that this range that serves as the previous area where prices range, right? It consolidated before that breakout. This range itself now serves as a demand region. Okay, so that's why I extended this across, and you can see price came in to tap this area. And then once again, right, when it taps into this region, you can once again see, right, coming into this area, it's now a bullish market structure, right? And an exit of this area, you can see on stochastics, right? So again, when it's in a bullish market structure, we want to focus on the oversold region, right? Or more precisely, we want to focus on the exit of the oversold region. So when price exited this oversold region here, you can see that it continues to push higher. And then once again, right, it pulls back into this area. Now this area caused the break in structure. It's also the extreme of this whole move. So this area now serves as a demand and price continues to the upside, right? So demand area here, again, right, price came in, it broke above structure. And you can see that when this demand region was being created, right, price actually did a slight pullback to this area before it continues higher. So the last demand region that was formed is this region here. So in this case, you can see that when price comes into this area, right, this region over here, right, it just whipped right through it, right, probably triggered by news events, but that's the idea, right? So if we are taking it, right, so there are a few ways you can take this, right? So it doesn't mean that we will always be right, but just when we're wrong, right, we want to make sure that we're managing our risks. So at any point in time, right, if you're taking specific trades, try not to risk more than 2% on each trade, and always ensure that you are taking your positions or doing partials along the way. So let's take the same example, right? So this range, right, so price broke above structure. So let's say if you want to enter at this range itself here, right, expecting a bullish move and using stochastics as the bullish confirmation. When stochastics exits this oversold region, right, this would be the first entry, and you want to consider taking your take profit target at the highest point here, because this is still a resistance level, right? So this would be a partial take profit target and also protecting your position. So any positions entered before, right, this area, the stop loss to shift it up to break even. So that's one, right? So when price pulls back, right, you won't be taking this move up and then pushing it riding it all the way down again. Okay, so this is more of trade management. And then once again here, right, when price comes into this demand zone, we saw that break in structure. So this is a valid demand area. You can see this once again, right, an exit of the region. Stochastics exits the oversold region. And this serves as a confirmation here, right? So when price pushes up, you can see that it creates again demand region along the way. So demand zones where price came in, tap into it before it continues to the upside, right? So this last area that we have over here, right? This last area here, you can see that again, this is the demand area. We saw price, it broke above the last high, right? Let's see if it actually breaks above this high. Let me just draw a horizontal line across and see if it actually, it might not have broken above this last high. Okay, but we'll have to hop onto the chart to take a look at the prices, right? But I think it forms an equal high before it pushes down. So if it forms an equal high, you can see here, right, then this demand area doesn't hold. But even if it breaks above the last high, right, then this trade wouldn't have worked out. But what's important is that on this trade itself, right, you want to consider, right, if price enters into this zone, right, a few ways you can use your confirmation either on stochastics, or you can go to your smaller time frames, right, look for that change in structure on, let's say, your 5 minutes. So that's one, right? Or if you're just taking it purely based on one time frame, right, then you can set stop losses slightly below the zone. So even if we're out, right, this one trade will not blow the account. Okay, so it's normal to have gains and losses, right? So we just need to make sure that when markets are not in our favor, right, how do we manage the risk? Okay, so let's take a look at another setup, right? So right now, before looking at another setup, right, I'll just introduce MACD, which is one of the momentum oscillators, right? So for MACD itself, right, it's useful in helping us to identify trends and momentums, right? So this is done by subtracting a longer term EMA from a shorter term EMA, right? So this creates your MACD line. And for MACD, right, usually the common ones used would be the 26 and 12 period, right? So MACD line would then be plotted with a signal line. So this is basically a 9 days moving average. Okay, so this is calculated. So if you load on TradingView, you will be able to see the MACD indicator, right? So I think what's important to note is just understand that MACD itself, it's more useful in trending markets, right? And helping us to identify momentums. So how we can interpret this MACD line is that when price crosses above the signal line, right, then it gives us the bullish signal. If it crosses below the signal line, then it's a bearish signal. And also if MACD crosses above the zero line, right, then it's bullish and vice versa. So we can use MACD in various ways, right? So we'll show how we can use MACD in the same example that we have covered just now. So on MACD, right? So this is the same example we have on Euro Dollar on a 1 hour time frame, and this is having after we've identified the daily zone, right? So recall that we have a daily time frame. So after we've identified this daily zone, you can see that there are demand zones that are being formed. Apart from this area where price form equal high, we don't have a break in structure, and then you can see this demand areas being run, right? Or demand areas not being respected. We also went through how we can use stochastics as an indicator to confirm the move, right? And if you take a look at MACD, right, you can see that on MACD, this area here, right? So if price breaks, rather if price goes above zero, you can see that if it holds above zero, it's bullish. If it crosses below zero, then it's bearish, right? And at the same time, if the blue line crosses above the orange line, right, then this is bullish and vice versa. Okay, so in this example, right, when price comes into a demand area, right, as what we've mentioned so far, you can see that coming into this demand areas, right, apart from just stochastics, the MACD crossover, right, will correspond to that move up as well. And this makes sense, right, because if you're in a bullish move, right, MACD helps you to identify potential change in momentum and trend. So in this case, right, in a trending market, right, when you have a bullish market, we're looking for a change in or a shift, right, from this bearish move, this pullback, right, to the move up. So in this case, you can see that MACD itself also crosses above zero and it crosses above the signal line. So this, it's a bullish momentum. So this here, right? So, and you see that move up. And then once again, right, on that pullback, you can see that MACD goes below zero, it consolidates, and then demand zones are again being respected. And this is important with that break above, right? So you can see higher lows, higher highs. And when MACD comes into this zone, you can see again, right, when price comes into this demand area here, MACD crosses above the zero line, right? So actually this, if you want to trade it solely based on MACD, right, and you want it to be above the zero line, then the trade will have been triggered somewhere here. So it will actually be this corresponding move. Okay, so that slight pullback that we have, right, where price comes into the demand zone again before it goes higher. Okay, so this is how we can use MACD, right? So if you want to use another indicator, right, on top of stochastics, right, this is how you can use it, right? But if you notice, right, throughout the examples, I've emphasized again and again, we need to look for market structure instead of just trading solely in, random moves, right? Because once you have filtered that out, you can actually look for where you want to focus this movement, right? So instead of just buying and selling at every exit and entry, right, exit of the region, right, then this would cause a lot of false signals, especially when you're in an uptrend, right? As we have saw earlier on Euro Dollar, if you're in an uptrend, prices can continue trending higher, right? And your stochastics can stay in overbought region for a long period of time. Okay, so just something for us to note. Right, let's take a look at another setup here. Okay, so now let's take a look at divergence, right? So for divergence itself, right? So apart from just trading just based on indicators as well as market structures, right? We want to incorporate the divergence concepts that we've learned in the previous session. So for divergence, right, again, if you are bullish, if it's a bullish divergence, it shows that there is a potential change in trend, right, from the downside and then a reversal, which is what we're seeing here. So you can see that when price comes in, so previously it was forming lower lows and lower highs. So prior to this move, it was forming lower lows and lower highs. It came into a demand area over here. And then what happens is that you can see the first sign of a reversal comes in here, where prices were ranging, right? And you see that there is divergence in terms of price forming a lower low here. Right? So if you compare the low of this move to the previous move, right, it actually forms a lower low, but on stochastics, it actually formed a higher low. So this is an example of a bullish divergence, right? Exhaustion and momentum. So then we saw that break above, right? But again, right, this divergence, even though it's a potential sign of a change in trend, right? Personally, I wouldn't take it just based on this because we don't have any other indications and we could see this slight divergence before price continues lower. So for me, this would be the confirmation, right, that prices are indeed respecting your higher time frames demand. Okay, so once that happens, right, you can see that there is a change in structure. Again, right, price comes in over here. There isn't any divergence, right, just stochastics exiting the region. So no divergence here. And then price again broke structure, pulled back into a demand area, right? And over here, you can see once again divergence coming in, right? So divergence coming in would suggest that this downward movement that we have, right? This downward movement, this exhaustion in this move, and given that this forms the bigger pullback leg, right? It's essentially the pullback leg of this whole bullish market move, right? Then this shows that when there is that divergence and it comes into a demand area, right? There is a higher chance that it's going to move in the direction of the trend. Okay, so if you want to compare, right, compare this divergence with this divergence, right? So let me just erase the rest of this so that's not confusing. Okay, so I'll just point out these two divergence. You can see that both of them are bullish divergence. They are both bullish divergence, and you can see on stochastics, right? Even though prices form a lower low, on stochastics it formed the higher low. But what I want to note is that for me, right, this divergence would have a much higher probability compared to this one, because at this case, right, in this scenario, you don't have any confirmation that prices are indeed changing just from a market structure perspective. Whereas in this case, you can see that demand areas are already being followed, right, or being formed, right? So this demand zones, these gray areas that we have, right, they're already being formed, being respected with this break-in structure. Okay, so I hope that this is clear, right? So just divergence alone, right? Try and look for divergence incorporated with other elements, right? Like your market structure, and also if it's sitting on any time frame. So in this case, right, just comparing this to divergence, this for me would be a higher probability setup. Right, and then price continues higher, you can see here, right? So apart from just divergence, you can also use these signals, right? So if you don't want to take it just purely based on divergence and stochastics exiting this oversold region, if you want to wait on MACD, right, to show that there is indeed movement to the upside, right, you can just wait for MACD here, right? So MACD is slightly slower. You can see that the entry would be triggered somewhere here, which is fine, right? Because this would still line up with the demand area. So recall, right, we have all these gray zones that are being marked out as demand. Okay, and then this area itself, you can see the price comes into this zone. Right? In this case, we don't have any divergence being formed, right? Lower lows, lower highs. You can see that price broke right through this move, right? And yeah, so still no divergence here, right? Even this area itself, even though price did move to the upside, but if you look at just purely divergence, there isn't any here, right? And on the break of this move, you can see that this is a break of the structure. So price broke below, right? So we need some kind of confirmation again, right? So if we move to the right, you can see that again, there will be clear market structures being formed following the break of this high. Okay, so when price comes into this zone, right, comes into this area itself, right, this zone, I'll be monitoring the trades, but I'm not looking for any long positions. You see this consolidation here, right? But more importantly, if you look to the left of it, right, it broke the last low here, right? So any bullish move, right, would have to wait. We need to wait for a break of this high, which is indicated here. So this consolidation here. You can see that price broke above the high, but more importantly, right, it broke above the high and then came in, right? And then you have again demand regions. And yeah, moving on, right? And when there's a demand area being formed, you can see once again, right, exit of the oversold region. But this focus only comes in here, right? You only know to focus on this exit of the oversold region here when market structure is already in place. Okay, so this is the market structure with the break of the high. So I hope that this is clear so far as to when do we want to focus on exits of which region, right? If we're just using stochastics, and also how we can actually combine them with divergence as well as momentum indicators. Okay, so this is what we have covered, right? Using stochastics to identify opportunities, how we can combine them across multiple time frames, right? And how we can use MACD to better identify entries. And then finally, right, incorporating the concept of divergence based on what we have learned throughout this whole series. And so I hope that stochastics it's clear. And if you guys have any questions, right, do put them under the questions tab. If not, right, just if not, right, that's all that we have for today's session. Right, so yeah, so if I have no other questions, right, this is what we you can sign up for, right? So for Vantage, for any webinars, right, we do have webinars on a daily basis. Just go to vantagemarkets.com/webinars. If you have any questions, right, do email us at support@vantagemarkets.com. Okay, so with that, we have come to the end of the session, right? Thanks everyone. Stay safe, trade safe, and we will catch you guys again soon.